A single number flashes across screens. It's a digital ghost haunting the portfolios of millions. 21. That's where the crypto fear and greed index sits today. It's not just fear, but extreme fear. It's a reading that paints a grim picture, a stark, numerical representation of a market teetering on the edge of a collective panic attack. For weeks, this sentiment has been brewing, a low-grade fever that has now spiked. We're in a sea of red, watching billion-dollar valuations evaporate like morning mist. The question that hangs heavy in the air, the one whispered in every trading forum and Discord channel, isn't just why this is happening. It's what it means for the future. Yes. Are we witnessing the final, gasping breaths of a tired bull? Or is this the silent, deep breath before an even more earth-shattering plunge? The market is a complex machine, a web of interconnected gears and levers. But right now, one lever seems to be jammed in the downward position, and no amount of good news seems to be able to pry it loose. We've been told to buy the dip, to be greedy when others are fearful. But what happens when the dip keeps dipping, and the fear becomes a deafening roar? Let's dissect the anatomy of this paradox, because that's exactly what it is. The story of the past few months should have been one of cautious optimism, a narrative of recovery. We saw whispers from the Federal Reserve, subtle hints that the era of aggressive rate hikes, the very policy that choked the life out of risk assets for nearly 2 years, might finally be coming to an end. The market craves cheap money like a desert traveler craves water. The prospect of rate cuts should have been a downpour of liquidity. The data supported it. Inflation, while still a concern, showed signs of taming. It was the green light we had all been waiting for. Then, another piece of the puzzle fell into place. On the geopolitical front, we saw a de-escalation in trade tensions. Tariffs that had acted as a brake on global economic growth were being reevaluated, some even reduced. This wasn't just a minor adjustment. It was a signal that the arteries of global commerce might begin to flow more freely again. For an asset class as globally interconnected as cryptocurrency, this should have been rocket fuel. And it wasn't just the macro environment. Within the crypto space itself, the headlines were overwhelmingly positive. We saw major financial institutions, the very titans of Wall Street that once dismissed Bitcoin as a fringe curiosity, deepening their involvement. We witnessed breakthroughs in layer-to-scaling solutions promising faster, cheaper transactions. We saw genuine, tangible progress in the real-world adoption of blockchain technology, moving beyond speculative trading and into practical application. Each piece of news, taken in isolation, was a reason to be bullish, a building block for a new rally. The script was written for a market ascent, but the market refused to read it. Instead of a steady climb, we got a slip. Instead of a rally, we got a rout. The dip was met not with buying pressure, but with more selling. The dump turned into a super dump, a cascade of liquidations that seemed to defy all logic, washing away the gains of hopeful investors and leaving a trail of wreckage. Every support level that analysts drew on their charts was shattered, one after another, as if they were lines drawn in the sand against a rising tide. The market wasn't just ignoring the good news, it felt like it was actively punishing it. It's a classic case of cognitive dissonance playing out on a multi-trillion-dollar scale. The fundamentals say one thing, but the price action screams the opposite. And in a market driven as much by psychology as by balance sheets, that scream is often the only thing that matters. So, what do we make of this coin season? This bizarre, frustrating, and utterly fascinating period in crypto's history. It feels less like a season and more like a psychological gauntlet. For those of us who have been in this space for more than a few cycles, there's a strange sense of familiarity, a ghost of market cycles past. We remember 2018, the long grinding crypto winter that followed the euphoric highs of the previous year. We remember the silence, the departure of the tourists, proclamations that crypto is dead plastered across the mainstream media. But we also remember what came after, the quiet innovation, the building, the laying of foundations that led to the explosive growth that followed. Is that what we're seeing now? A necessary brutal cleansing? A shakeout of the get-rich-quick crowd, leaving only those with genuine conviction and a long-term vision? It's a compelling theory. Perhaps this isn't a failure of the market to respond to good news, but a maturation. Maybe the market is no longer impressed by hype and headlines alone. It's demanding more. It's demanding sustainable growth, real-world utility, and projects that offer more than just a clever meme and a high APY. The easy mode of crypto, where you could throw a dart at a board and likely hit a winner, feels definitively over. This season is a test of patience, a trial by fire. It's forcing everyone to reevaluate their thesis. Why are you here? Are you here for a quick flip? Or do you believe in the transformative potential of this technology? This is the question the market is asking every single participant, and it's asking it with brutal, unrelenting price action. For the altcoins, this period is particularly perilous. The dominance of Bitcoin tends to rise in times of fear, as capital flees from riskier smaller cap projects and seeks refuge in the relative safety of the original cryptocurrency. We're seeing a great divergence, where projects with strong fundamentals, active development, and clear use cases are holding their ground far better than the narrative-driven tokens of yesterday. This might be the great consolidation we've always talked about, where the wheat is finally separated from the chaff. It's painful, no doubt. Seeing your portfolio bleed day after day is a mentally taxing experience. But it's also a period of immense opportunity. The fear of the crowd has historically been the best friend of the diligent researcher and the patient investor. This isn't just about buying the dip. It's about using this period of fear-induced low prices to accumulate positions in the projects you truly believe will define the next decade of digital finance. It's about having the conviction to act when everyone else is paralyzed by fear. This season is a reminder that in crypto, fortunes aren't just made in the euphoric highs of a bull market. They are forged in the despairing lows of the bear. This is where the next generation of winners will be decided not by the noise of the crowd, but by the quiet confidence of those who can see the forest for the trees.